Hi, this is Cristina Dougherty with Cristina Dougherty and Associates here at Long & Foster in the Fair Oaks area. Today we're going to talk about how to pay off your mortgage early. So one of the best ways to get more equity in your home, obviously, is to try to pay off your mortgage early. There's about 40% of Americans that actually live debt-free, which means no mortgage. Not always able for all of us to achieve, but something nice to strive to. So one thing you can do is you can switch from monthly payments to bi-weekly payments. So let's say your mortgage is $2,000, and instead of paying $2,000 once a month, you're going to pay $1,000 once every 2 weeks. Over a 12-month period, instead of paying $24,000 towards your mortgage, you're going to end up paying $26,000. So another way of doing this, if you're disciplined enough, is just to make one extra payment a year. It all amounts to the same thing. One might be less painful and more automatic if you do the biweekly, but you can also just make the extra payment. I heard once that making one extra payment a year can knock 7 years off your 30-year term, which is pretty significant. The next way to kind of pay down your mortgage is, this is what we do, we round up. So let's say your mortgage is $1,986, you're going to always pay $2,000, and that difference is going to go towards your principal. You want to make sure you notate principal only, and everyone's loan terms are a little different, so make sure you can pay it off early. But that's another quick way of getting your principal payment down first, because at the first 15 years of your loan, you're pretty much paying all your interest, so you can pay a little more towards your principal. Obviously, that example was, $15 a month. If you can get it up to $75 a month extra, that will really pay off. Obviously, another option is to refinance from a 30-year, if you have a 30-year fixed, and you can handle a higher payment, is to go to a 15-year. So again, if you're able to make that higher payment, it might make sense. Also, if you originally got your loan at a much higher rate, and rates are really good right now, a refinance might make sense because you could end up paying the same monthly payment, but doing it in a 15-year versus a 30, which is significant. One thing I will caution you about is to keep refinancing a 30-year loan. Not only are you obviously extending your number of years of payment, but you have closing costs associated with that. So even though your rate is lower, you're not really gaining any traction. So just be careful. I know people that are like serial refinancers, and just be careful, because that's not going to be the best way for you to make your money. Hopefully this information has been helpful. Feel free to subscribe to our channel, and you can find us on Instagram and Facebook. See you soon.